Good afternoon, everybody. Good evening, good morning, wherever you're at. I really appreciate you coming here today. My name is Michael. I am the obnoxiously loud prognosticator of prognosticators here at Back to the Future Trading. I am the founder, president, and lucky friend to my best friend and business partner, Ron Gardner, here at Back to the Future Trading, my partner at the company. And it's an honor and a privilege to be here with everyone. Let's just take a second, say hello to some names that I recognize. Yo, Earl. Chris, good to see you. Christopher Ancone, who currently has the longest running number of webinar attendances without a purchase. Chris, you are officially the longest attendee ever without moving one way or the other, being disgusted or impressed enough to purchase. Welcome on board. Pablo, ¿cómo está usted? Rich, good to see you. Tim, what's up, Mr. Murphy? Mr. Murphy, the tick hunter, one of our more successful customers here today. Pleasure to see you. Len, Laura, what's up? Good to see you as well. So many names that I recognize here today. Thank you for coming. It is an honor, again, like I said, and I won't waste any more of your time. We'll get right to it here. I just wanted to get started here and start running. I have a profoundly unique worldview in that about 15 years ago, on the heels of a devastating trading loss, one that nearly cost me my family and my friendship with my then and now best friend, we discovered that trading in the industry of trading was the most corrupt and rigged industry we'd ever been involved in. My partner and I were engineers. We had designed and manufactured, installed, and trained people to work on complicated mechanisms, in some cases 5,000 parts or more. I'd been a co-inventor on at least a half a dozen patents, and I discovered in trading, intellect had virtually nothing to do with success. And we took an account from $15,000 to $55,000 in 3 months and lost 50 of the 55 in 36 hours. It broke me. But I don't like not knowing how things work. I was raised by a man who took things apart and fixed them. My mother begged my father, please, can we get a new washing machine? And my father said, it's only a broken belt. It's only a leaky hose. It's only a burned motor. We can replace these things. I'll show you how it works. And I would sit there and hold his flashlight. How many of you growing up would hold your father's flashlight for him while he worked? I suspect there's more than one of you out there. The ongoing joke with my father was no matter where I stood, if we were working on a car, I was always blocking his light. It could be high noon, and the shadow would fall 3 inches around my feet, and I was somehow always blocking his light, Laura. So I set out together with my partner to discover how do markets work. And surprisingly, the answer was naturally obvious. Naturally obvious. Now, I'm going to show you in a minute how I can prove that. Prove it in a way that other vendors who sell stuff can't. We have multiple ways to entreat you to believe what we're saying. Customers who've been verified by third-party companies as to the status of their actual purchase. Real people who've left testimonies for people. I've also given about 40,000 people this week the signals for the markets. specific times and directions, we were warning them that the markets they trade might go up or down. And that's what this slide is essentially encompassing, this idea that we're the only company, we're so far out on the branch that we dare you to follow these times. Now, I have a conventional way to teach this, and I have a relatively unconventional way to demonstrate that markets are random. And some of you are fairly fundamental and conservative. And I want to assure you, I'm going to go the unconventional route. I showed this to Laura earlier today in our training session, and she didn't freak out. And I was wondering, I'll ask permission. Is it okay if I show you something weird to demonstrate the predictability of seemingly unpredictable markets? You may not understand and or agree with what I'm about to show you, but I want to show you nonetheless because it's something that no one really talks about. And then we're going to look at the signals from today and how the signals performed, what actually took place at the times and the directions that we were waiting for moves to occur in markets like oil and gold and the E-mini S&P and so on. So let me show you something really quick. Right now, one of the most unpredictable markets in the world, see if you can guess it. We fight wars over it. We tell people there are weapons of mass destruction in the countries who have it. We sanction large countries that have tons of it unless they buy lots of weapons from us, and then we don't sanction them. That's right. Oil. Oil is one of, if not the, most volatile and unpredictable markets in the world. And in a minute, we're going to talk about these signals on my chart. But instead, I want to show you something weird, something that I personally believe banks are aware of and take advantage of and use to manipulate you and your trades. And if you'll bear with me one moment, this webinar, I'm pretty excited about it. You're going to learn something and hopefully change the way you trade forever. So this is oil. This is oil futures. And what would you say? Your credit card, I promise, won't be automatically swiped when you're not looking if you answer this question. What would you say generally happens at the red signal? And what would you say for most of the time the price of oil does when a red signal appears on this chart? Now there's tons and tons and tons of signals on here. I'm looking at the last several months. That's right, it goes down, except this guy, and we're going to talk about that. And what would you say happens most of the time near this green dot right here, with the exception of this one? It goes up. Okay. So when we're looking at these red dots, there's a very bizarre thing that's occurring. Every red dot is a new moon. And every green dot in the price of oil on this chart is a full moon. Now, how do you feel about that when I first tell you this? Laura, it feels a little strange. Chris, right? Feels a little weird. Feels like if we talk any more about it, they won't give us free coffee and muffins at church on Sunday. It feels taboo. It feels hippy-dippy, tree-hugging, crystal-rubbing, liberal, progressive, weird. Now, one thing we know is when the next signals are coming for the next 1,000 years. We know from astronomers and astrophysicists to the hundredth and thousandth of a second when the next full moon and new moon will be for the next 1,000 years. There is a language and a rhythm to the timing of events in the world. I am convinced beyond reproach that this is true. I'm also convinced that the more you watch the signals, the more fluent you become. In fact, in your GoToWebinar chat box area, there's a section called Handouts. And you'll see in your Handout section, I've put a book that's about 6 or 7 years old now that helps me translate some of the words in time. For example, when we have a selling pressure signal, like a new moon, for example, and either it, the candle to the left of it, or the candle to the right of a selling pressure signal, whether it's the TachEon warp, or in this case, this weird example, a new moon, we've learned over the last 15 years that the signal has the capacity on the very next page to reverse and go up. It's an inversion signal. Gann said the inversion signals he encountered, William Delbert Gann, of course, of trading infamy and a practitioner of predictive trading tools. He tells us in his notes, when you get to the reverse signals that go the opposite directions, they're the biggest moves. Well, if we apply this rule to this chart, you'll see candle number 2 is the signal with the red dot over it, right? Chris, can you see how the candle to the left of the new moon is exactly like the example in my 6-year-old webinar handout? It's the lowest of the lows, right there. And so as such, I'm allowed, using the mechanical rule, to place a green arrow underneath it. And Chris, you see how it starts going up? This is an example from June of 2016. And here we are nearly 7 years later, and the same thing happens on a daily lunar chart as what occurs on a data mined 1 minute NQ chart. Now that's freaking weird. It's definitely leaking into the tree hugging, gun grabbing, crystal rubbing, protesting, Prius driving, hippy tippy weirdness. I love Priuses, by the way. I'm just going to confess that. I think they're a pretty cool car, which makes me even weirder. Now, I discovered a new pattern about a couple months ago. And I want you to see that I'm not making any of this stuff up, that I don't pull things out of my butt at the last second and invent things to try to impress you after the fact. I'm also a very messy person when it comes to my desktop. All right, can you guys see where I'm hovering over right now? I'm going to right click and go to properties, and you'll see that it was saved Tuesday, February 1st, 2022. March, April. So it's about 2 months old, the drawing. And I'm going to open it. When we have a buying pressure signal and it has a higher high than the previous signal, has a higher high than the previous signal in relation to the fourth candle. We treat it the same as a pattern 5. Well, what's a pattern 5? A pattern 5 does this. It reverses and goes in the other direction. So a pattern 5 looks like this. So David, check it out. When I go on, to crude futures, which is a time-based chart. Watch this now. Ready? I'm going to draw on my chart. Pattern candle number 4, candle number 3, candle number 2, candle number 1. So David, watch me. Higher high, higher high, higher high, signal candle. Higher high, higher high, higher high, signal candle. And what did we say in the 2-month-old newly discovered pattern in timing? We said that when we come across that, it's going to behave like a pattern 5. And what do pattern 5s do? They do this. So now let's go back and look at the crude futures chart, right? Only this time, instead of a green dot here, I treat it like a red dot because it's a pattern 9. And then down below, David, instead of a red dot, I treat it like a green dot because it's a pattern 4. Now, all of a sudden, you start to get a sick feeling in your stomach. You start to get a sick feeling in your stomach. So watch. I'm going to replace the new moon signal with a transparent dot. I'm going to replace this one with a transparent dot. Hey guys, how predictable is the price of oil in terms of large movements? We're predicting it to go down until this time, up until this time, down until this time, up until this time, down until this time, up until this time. There's 2 down days. It's predicted to go down until this time and now up until this time. Could I have done anything to influence this chart? Could I have somehow changed the dates that the full moons and new moons arrived at to confuse you? Yeah. But have I shown you something that you can verify on your own? We could very easily, for example, go to a website, and look for the dates that these things actually occurred. And if you do, you'll verify these are the signals. This isn't the only market that does this. Every market is susceptible, is related to these types of time-based cycles. They are predictive. They are entirely predictive. In fact, if I come over and I open a workspace that I built for a customer that was interested in our software, he traded Bitcoin. Bitcoin is one of the most unpredictable markets in the world, more so than oil. It's a weird, unstable, fraudulent, Sam Bankman-Fried, Alameda, Waka Waka market. Anything can happen, and usually does. It's a weird market. It surely, don't call me Shirley, it surely can't be predictable in any sense of the word. Is that workspace not going to come up? Here, I'll turn you off. Are you going to fill in? No, you're the wrong one. But that's okay. I still love you. All right, I'm going to rebuild the chart here. Hold on. I'm going to use the same signals, the same settings, templates, load, lunar stuff. I promise we're going to get to something practical. I just want you to learn something today. Someone asked me today, how come more customers haven't bought the program? And this was the answer that I gave them. It's weird. What we teach is weird, but it works. Okay. Chris, knowing what you know about what I just taught you, Earl, Tim, Len, Lara, is Bitcoin as susceptible to this as oil was? Boy, it sure looks like it. Boy, it sure looks like it. Well, maybe it's isolated. No, it's not isolated. Huh. What does that mean? Well, if you don't focus on the why, and just focus on the what, it means that if you're an options trader or you're a buy and hold kind of guy, you could get in at the close of the full moon and sell at the close of the new moon. You could get in at the close of the full moon and take a loss right here, basically give what you just made back. You could get in at the full moon and sell at the new moon. You could get in at the full moon and sell at the new moon. You could get in and get out. You could get in and get out. Cancel each other out. Minus 200, minus 100, minus plus 6,100, plus 7,500, a net $13,000 gain in Bitcoin since October. Yeah, Lance, of course they do. Let's put a pin in that as I build up to it. So the program that I'm going to show you in a second is as predictable in that, Lance, do you see how the next signal here is in 6 days? 1, 2, 3, 4, 5, 6. April 6th is the next full moon. So Lance, we could put a dot right here, right? To remind us there's a full moon coming. This is an entirely predictive chart. Just like what? Just like our other workspace. Just like this chart is an entirely predictive chart. So Lance, how important is divergence if I know that this is going to happen 60, 70% of the time? I want to get inside your head for a second. I was about to show you, and I'll still show you. So Lance asked the question, does this work with divergence? And what's wrong with that question in relation to what I just showed you? Divergence is a lagging indicator, right? It's measuring anywhere between 50 to 120 bars in the past. And I just showed you a signal. Laura, this is why I don't sell more programs. I just showed you a signal that is 100% predictive. Open source. The data is entirely public. And here's the thing. Banks are using it. How do we know banks are using it? We know because the very first, biggest, baddest Buster Scruggs OG gangster told us he was. He knew Lance would be looking at divergence. And I'm not making fun of you because I used to do what you did. You're picking tops and bottoms with divergence, which is the fastest way to kill your account. Millionaires don't use astrology, Earl. Billionaires do. Richest man on the planet. His company is currently one of the largest financial institutions on planet Earth and continually fined for trading violations. They know about this. So Lance, which is more important? Divergence or the fact that I know when the signal is coming? You're sort of asking me where I can hang the pine tree air freshener in my Bugatti Veyron. Do you guys have a hook where I can put this air freshener? Why are you putting an air freshener in a Bugatti? It's a Bugatti. It's 100,000 times better. 100,000 times. Time is the supporting actor in the market movements. It is what drives everything. Everything is driven by the element of time. If I come at it from a different perspective and I analyze the market and look for recurring patterns in time, now we're into warp. If I approach it from the right-wing, gun-loving, pickup driving, kissed my mama on the way to the turkey shoot barbecue away, and I throw thousands of historical bars at Bitcoin, and I ask a highly advanced, technologically sophisticated algorithm to look for recurring patterns in time historically. No moon. We get to eat the muffins at church on Sunday. No moon. No crystals. No kumbaya. We get the same results. The problem is that almost all of you were taught by somebody at some point. I was taught my very first trading system that I bought. He convinced me, if you look for this pattern right here and your MACD does this, you have divergence. And you buy when it breaks through the middle right here. You put your stop underneath this low, Lance. You measure this distance, X, and your target is either X or 2X above the breakout entry. Does this look familiar to anyone? You're all liars if you say no. This is what they taught us. If you do this, you will be richer than anyone on your block. And what they told me was a lie, because it doesn't do that all the time. Because sometimes, most of the time in 2008, it was doing this. If you want to enrich the vendor community, if you want your guru to have that third, fourth, fifth Audi for his trophy wife down in West Palm Beach, please continue to use lagging indicators. Please. But of course, if you want to hang the pine cone scented air freshener in the Lamborghini Murcielago, you can come in here and you can take a MACD and use it like a whoopee. You can use it like a whoopee. And you can measure things. I know how to do everything that you guys do, because I did everything that you guys did and are doing. And I can measure divergence right here. And I can see that the low between here and here was lower, and the low between here and here is higher. And that means, Lance, I could have entered right here. I could have thrown a volatility instrument on top of it. I could have taken a Bollinger Band, and I could have verified that the 1111 signal, Lance, was at the lower volatility band, 2 standard deviations away from the mean, when we were encountering divergence at that signal. Or I could start to strip away all of the junk and the nonsense. I could strip away all of that and just ask the question, when are the banks likely to push the price of oil higher or lower? And I can see in the future when they're planning to make their moves. And I could have sold oil short from 11:30 to 12:09. I could have sold oil short from January 23rd to March 7th. I could have sold oil short from February 13th to February 21st, and again from March 2nd to March 20th. And I could have been doing that for years. I could have done it on the way up. I could have bought on December 31st last year until January 26th, bought from here to here. And then I would have seen the pattern 5 right there. So yeah, you can add all the stuff that they told us would save our lives on top of the charts. But why would you? That's the problem. So how do I prove this exists? How do I prove this works? Well, one of the ways that I do it is I give you the times in advance. If you're not a customer, you get these crazy emails from me. And there's a link to a page. And the page has the forecasts for Wednesday and for Thursday. E-mini S&P 5-minute chart, 3-minute chart, 3-minute oil chart, 1-minute oil chart, 5-minute gold chart, 3-minute DAX, 3-minute euro currency, 3-minute Dow, 1-minute NQ, 5-minute euro dollar, 5-minute pound dollar, 5-minute Ethereum. Lance left the webinar. Lance did not like my answer. Laura, that's why I don't sell software to everybody. People's feelings get hurt. No one wants to be told you're doing it wrong. He's now Skyping his buddies. He's now on a forum, futures.io or Forex Peace Army, and he's going to write a 900-word essay about what an idiot I am. That's what happens 90% of the time. It's okay. E-mini S&P 3-minute chart. The program warns me in advance, warns our customers in advance. And it says, hey, I analyzed the data. This material was available to you on the Facebook pages on Wednesday morning. And if you're on the mailing list, I sent it out Tuesday night. So on Tuesday night, the program, Mark, warned us there were some recurring time patterns. There were waves, and the signals were at 8:39, 9:18, 10:03, 10:21, 11:33, 12:15, 1:09, and 2:21. Is everybody still with me? I feel like Lance kind of brought us all down for a second, me included. Give me a yay or a hey or a woohoo if you're still in it and I didn't lose everybody. Sometimes I feel like I'm talking to the voices in my head, which are oddly enough entertaining. Okay, woohoo, there we go. Thank you. So when we get to those times on the chart, this is what takes place. So the first thing we kind of have to look at is, do the signals on this chart bear any resemblance to the predictive signals that we've been looking at? Could be lunar signals, whichever. And oddly enough, here's the thing. If we examine what happened near the times we were watching for moves, an odd thing occurs. Somebody tell me what's happening at the 3-minute signals I published and sent out to people on Tuesday. What happened if you waited for 10:03? What happened if you waited for 9:18? What happened if you waited for 1:09 or 2:21 or 11:33 or 8:06 or 7:51? So John, I have a weird marketing method that I developed to preserve the sanctity of my integrity and to prove to people beyond a reasonable shadow of a doubt that what I'm telling them is true. And what I'll do, John, is I'll send out the signals on the Facebook pages and the email groups on Tuesday night for Wednesday and for Thursday. The hope is that the uninitiated will follow along. And if not, on Thursday, see for themselves what took place. And so what it does is it creates, Brian, what market do you trade? What time frame do you trade it? There's no way all your trades were wrong. Stop being weird. Because I'll pull the signals up in front of everyone and show them what you were looking at. I did this with you already. I showed you 3 days worth of signals, $1,800 of trades per day across 3 signals. Do you live in Bizarro Superman world? Where everything's upside down and wrong? We will look at the NQ in a minute. So John, the problem is at this point, I can't have changed the signals. I can't have manipulated them. I gave people the signals in advance. And so by the webinar, I've given out the rules of the system and the times and directions in advance. So my hands are tied at this point. There's no way I can curve fit or guru the signals. Does that make sense? So that's my Eagle Scout. On my honor, do my best to do my duty. And so when we get here 2 days later, John, I point people's noses at what actually took place. In fact, during the day, I'll come in on the Facebook groups and I'll tell people in advance, hey, this is what's about to happen. So, John, I gave out this signal to a group that's got about 7,800 people in it. And then I'll come back and I'll show them the trade that I took. And Brian left. So, John, using the signals, I told people, I'm holding until 1021 opens, looking for a 10-point target or whatever I can get by then. You see that, John? So I'm getting ready to get out at 1021. And then on this chart, you can see what happens at 1021. Maybe I need to be kinder. Is kinder the answer? All right. So that's an example of a signal, meaning if we take away all the information, hey, Justin, if we take away all the information but time, and we look at what we were expecting in relation to what took place, Justin, can you see there's a sense of if we trust the fact that the behavior pattern is likely to occur again in the future, it usually does. 2 days after a potentially fraudulent, voraciously fraudulent vendor gave you the signals. So Brian, John, this is my way to show you, unvarnished, what the default settings of the program are designed to do. And when we wait, you can see in the pre-market sessions, right? Let me go back here. John, can you see I gave you the signals since 2:15 in the morning Eastern until the close at 4:30? Justin, 2 days later, can you see what happens in the pre-market too? Lowest hanging fruit we'd probably both agree about, 348, 309, 227, 445, 536. Man, it hangs on there sideways. 633 and 642. Then you get into this choppy mess. This one stays where it started, drops lower. This one doesn't work. This one doesn't work. And this one opens and closes where it started, one tick lower. So the reason I do it this way, everybody, is because nobody believes me when I tell them. And so, John, I have to do it this way because most people are so entrenched in the old ways that aren't working that this is the only way to show them I had no way to influence these results. So let me ask you this question. For the largest futures market in the world that everyone trades and has been told to trade, can I say with any level of integrity, 0 to 25%, 25 to 50%, 50 to 75%, 75 to 100%, Is it okay, John, based on what was sent out to everybody 2 days ago, that the signals are somewhere between 60 and 75%, 60 and 70%? Is it okay for me to say that? When I was expecting a move 2 days later, 6 or 7 times out of 10, the move occurred. Daniel, the settings on my chart are right here. They are the same settings every week. I'm going to take a screenshot for you, in fact, and I'll put them in the chat box. If you give me 1 second, it's booting up right now. So John and Justin, one of the things that we have to contend with, if you say yes, yeah, Michael, at least 6 times out of 10, when we were waiting for the signal, it went in my direction immediately, is it runs counter to, against everything you've been taught. For example, if the price of oil follows the size of the moon in the sky that reliably, why isn't it on CNBC? If Bitcoin does exactly what I showed you with publicly available information, why aren't people falling over themselves to talk about it? There's the link, by the way, Daniel. And if I can show somebody that the biggest futures market in the world is predictable 60 to 70% of the time, and you can know when the market is going to move in your direction 2 days in advance, Justin, how come only 10 people out of 100 who come to a webinar and see this actually get it? Because it's not just one day. It's other days. Look at the historical performance of it. It's the same signal. Those are the signals yesterday. Those are the signals the day before. Justin, were the signals on Tuesday 60 to 70%? Yeah. How about Tuesday morning in the pre-market, in the London session and the Asian session? These were all times that we were expecting moves to occur. And no matter how far I go back, it's not isolated to one day. It's not isolated to today. It keeps going. When we arrive at the signal that we're expecting banks to manipulate the market again, it goes and goes and goes and goes and goes and sometimes doesn't. Here's the day before. That's FOMC. Here's the day before FOMC. This will work on any time frame you want to analyze. So we can go from a 3-minute to a 15-minute chart. And John, did I change anything other than the time frame? No. And as we go back in time, is it still 60 to 70% of the time accurate? Your eye is freaking out right now going, oh my gosh. Look at the signals. These are all times you could have known in advance. And no one wants it. It's like me walking up behind somebody playing cards in Las Vegas and saying, hey, John, I know what the dealer's cards are. I know what he's going to pick up the next 3 hands. Do you want to know? I'm usually right about 60 to 70% of the time. I've been doing this for over 14 years. Nah, I don't want to know. I want to look at the divergence. Can you tell me what the divergence is? Yeah. So we can apply this to different markets. So one of the markets, Bitcoin futures on a 5-minute chart. Yeah. So Bitcoin futures on a 5-minute chart, 1250 per tick or something, right? Doesn't it trade the same as the ES? How do we trade it? How do we trade it? And here we get into the second half of the most ridiculous webinar you've ever been to. The reason people don't purchase is because they don't follow rules. Brian, whose name is Bao in real life, told me earlier this week that the software didn't work. Here he is right there. And so I want you to see, he told me, this software I bought doesn't work. And so I said, okay, let me look. Because I didn't make money the last few days. And so I sent him the charts. And I said, hey, I'm looking at the NQ, and it looks like it's working. And the same settings as what I have on the chart. And then, John, I said, hey, did you use the trading system I taught you? Because if you did, today was a plus $1,800 day. And then I said, hey, the day before that, these are the signals. And if you followed the rules, it was a $1,900 day. And then I looked at the day before that, and I said, here are the signals. And if you followed the rules, it was a $2,500 day. And he did the same thing that he did to me today. He left. He ended the conversation. What are the rules? I'm glad you asked. In addition to sending you the times in advance, I gave a very basic trading system. What's the trading system? And there's a difference between the signals and the setup. One example of one way you can trade with time. In the email, we will also be showing how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. No 15-minute open range, blah, blah, blah. Signal with trend or puncture trade. And then, John, I gave a link to a video that shows exactly what I'm going to show you here today. Same thing Bao got. And then we'll look at the NQ together. When you have a signal with trend, we're using a 120 period moving average. Does it have to be a 120? No. It doesn't have to be a 120. It can be a 50, it can be an 89, whatever you like. Just be consistent. We're going to use a 1.5 average true range stop when we get to the signal. We're going to look and see what direction is the moving average going. What direction is it going? If it's white, it's moving up. Means the trend is up. If that's the case, we're going to buy at the close of the candle. You can buy at the open, I buy at the close. My stop is going to be 1.5 ATR values away from the candle. You can get as close as 1 with markets like the NQ, but I don't recommend it. 1.5 is a healthy stop level. Kind of standard in trading. I'm going to exit by the time I get to the next signal. When the trend is up, I'm going to buy at the close of the buying pressure candle. My stop will be 1.5 average true range values away, and I will exit by the opposite signal. When the trend is rising, I will enter at the close of the buying pressure candle. My stop will be 1.5 ATR values away, and I will exit by the next signal. Pretty simple. There's one variation of this. If the candle the signal starts out below the moving average or on the opposite side. If the candle eventually closes above the moving average, we call this a crossover trade. We'll enter at the close of the candle. We'll hold it until the opposite signal arrives, but our stop is going to be 1 tick, 2 ticks below the low of the crossover candle. So if this signal formed and then the moving average started dropping, Justin, and the candle was a low close candle like this, it closes at the low, I would enter short. My stop would be 1 or 2 ticks above that cross below candle, and I would exit by the next buying pressure signal. Does that make sense, everybody? A crossover is sort of like a late signal with trend. It eventually gets there. All right? So that's variation of signal with trend. No divergence. Oof. I'm going to get flamed on forums today. Woohoo! This next one is less obvious, but it is profoundly important. When we're waiting for a time, Justin, these dots are on the chart, not because of the moon. Time is still time. But this white dot is here, and this white dot is here, because the software has analyzed the last several thousand bars of data and determined that lately, over and over again, the market gets pushed up at this time. It's a behavior pattern, a recurring behavior pattern. This has happened so much lately that the computer has warned us, banks buy now. This time of day, here they go. It's going to happen again, maybe. So when the trend is up, of course, I want to be a buyer. But I can also look at the counter trend signals. At 9:30, John, I'm expecting the market to do this, right? That's what I'm expecting. Or to go sideways. If they're selling into the uptrend, it can go sideways. It can consolidate. So one of those two things is a possibility. Well, there's a third possibility. What if it continues to rise? John, Justin, are the banks defending the position that they usually take on the hill? Are they selling as hard as they can from 9:30 to 9:48? Doesn't look like it. It looks like nobody's here. We open the closet. There's no sellers in there. It keeps going. It keeps going. Well, what's the only thing that can hurt my long position? Sellers. And John, if they're not there, boy, that leaves a good opportunity for me, doesn't it? The people who usually sell now are absent. Bueller, Bueller, Bueller. So I will buy, I have a buy stop 1 tick above the selling signal's stop. Because now we're on the north side of the Mason-Dixon line. And I will put my stop 1 tick below the puncture candle, the candle that broke through. So it's a behavioral failure with trend. The people who are supposed to be here are not here. Let me see if I can sneak along in here, if that's the case. So let's look at the Bitcoin chart. We'll start just before the econ, just to put some good in with the bad, bad in with the good. So John, at 8:25, the candle punctures the blue line, just like the example. It starts out and then it stalls and it hits my stop right below the low. I'm out. First loss. John, This candle closes below the moving average. It needs to close above the moving average as a crossover for me to get in, which it never does. It punctures the stop line of the white dot. There are no buyers here. I am now a seller of Bitcoin futures at that distance, one tick below the white line. My stop is one tick above the puncture candle. I'm now going to hold this trade until when? The next time, which is right here, $120. 10.50 at the close of the candle, I get in. At 11.10, I get out. I give 85 back. 11.40, I get in. I'm going to get out by when? 12.20. I pick up 200. At 12.20, the signal bounces up. There are buyers here. See the difference between a signal, John, where the bounce occurs and a signal where it just sort of continues to erode and drift down? They look different. It's the difference between Sylvester Stallone hanging on the face of the cliff and John Candy hanging on the face of the cliff. Guys, fingers getting tired. Ah! I can hang here all day long. I'm going to climb back up. 12.55, close of the candle. What do? I sell short. Where's my stop? Above the blue line. When do I hold the signal until? Close of this. 430. 2.15, I enter at the close. I exit at the stop. I give 150 of it back. On average, when you are using a trend trading system, you can expect a market expectancy of 50 to 55%, averages around 53, 54. And so a trend trading system makes about $1.50 to $2 for every dollar that it loses. Your winners are bigger than your losses, more than half of the time. And so in Bitcoin, we see 1, 2, 3, 4, 5, 6, 3 winners, 3 losers, plus 120, plus 200, plus 430, minus 55, minus 85, minus 150. So those things are borne out in real life. These are the NQ signals for this afternoon. The ones Brian say don't work. Let's go through it. These are the farthest from the forecasts. Below the moving average, no puncture. Sell at 214, exit 218. John, it's below. Justin, it crosses over. My stop is one tick below the low. I'm going to hold it until the next signal, plus 14. I enter at the close of 235 and I take a loss at 245, minus 8.75, sorry. Enter at 257, exit at 305. Enter at 315, exit at 325. Enter, it's a pattern 5, who cares? Stop loss. Last trade of the day, enter, exit. Now we're in the Globex session, enter, exit. 5, 12, 23, 32, 46, 43, 34, 20. So in the afternoon, and Brian doesn't like this, This made $400 per contract, trading the signals in the direction of the trend. People can't follow rules, right? Let's take a look at the E-mini S&P 3-minute chart. If we do the same things, right? Oh, let's come here. Enter, exit, $1 loss. Stay in draw mode. Ruler. Crossover signal. Another $1.50 loss. The candle crosses over. It goes $250 in our direction. Today with the chop, we finish at a full stop, -4. 11:33, close of the candle. We hold it until 12:15 for a $3 win. Puncture trade. I actually pick up, woohoo, 2 ticks. Close of this candle until here is $450. I miss my break even by 2 ticks. I'm sorry, 4 ticks. I take break even trades at plus $500. So it gets $450 in my direction. I finish with a small loss, -2. Crossover candle, I enter at the close of the candle, and Justin, I get in for a +4. My stop on the crossover is 1 tick underneath that candle. At 3:24, I enter at the close of the candle. I hold it until the close of 3:48. And now I 3:57, I enter. I have to wait for the market to close, and then I close my position at 4:35. 3.5, 7.5, 8 3/4, 13, 14.5, 12, 8, 6, and how much is this? 5. So at the end of this day, it's plus $250. Not the biggest, but not the worst. This is the Globex session that I also gave you the times for. So if you're not in America, you're in Australia, you're in London, winner +4, small loss -2, winner +8, winner +2, winner +2, winner +5. Now the Globex session comes into the London session comes into the morning session of the US, -1, -1. This is just before the econ at 8:30. I don't trade before reports, but if we did, we were stopped out, and then you could re-enter and pull 5. Yes, John, all of the signals are exposed to a strategy for automation. You could call upon these signals for a strategy development, and there's a version of the tool that has the Booleans exposed for the Shark Indicators Blackbird logic node builder if you want to build strategies with that. So in addition to the $250 of the US session, there's another $500 in the London session. We can go back and do the same thing for yesterday. And if you do the same thing for yesterday, you'll see the same thing. The net gains are all there. And as we start to pull apart each of these markets, can you see how this might be a useful tool? For a market like oil, if you're an oil trader, What if you took longs at the buy dots and shorts at the sell dots when we were driving down, day after day after day after day after day? You know when the signals are coming. Oh. People were upset with me today. 35 ticks, 61 ticks, minus 23, minus 31, plus 5, plus 40, plus 44. They don't want to talk about this because they have to admit that what they were doing and what they're doing is wrong. If I can tell people using the size of the moon in the sky what the markets will do in advance, and then I can apply a piece of software like this, two days ago, I sent out this diagram for oil futures on Thursday. We started with an example of lunar signals on the daily chart for oil. 1 minute CL. Email Tuesday night, Facebook Wednesday morning. Watch. Hold on. Stay with me. 922, 922, 938, 938, 903, 846, 830, 812, 757. $950, $950. Justin, are these times the same times as what I put out to 40, 50,000 people? What's going on, man? What's going on? What's happening is that banks are being judiciously I'm not going to use big words. They know this is happening. They know this is happening. And so when these times arrive, they jump on it. They create stop runs. Let's take a look at the euro currency. I haven't looked at that one in a while. 6E on a 3 minute. 6E0623 on a 3 minute chart. I haven't looked at this one in months. Jesus Christ. Again, if we take the times and we look at the chart and we look to see if they matched what was sent out, 748, 833, 748, 833, 845. Yep, they're all the same times. What if we bought at the white dots on the way up? The euro trends, right? Here's today. There's the Globex and yesterday. There's the day before. The day before that. And so we get those 50, 53, 55% of the time, and the winners are twice as big as the losers. Now, here's the thing. I know the times in the future. For those of you that are customers, I took a look at the daily chart for the E-mini S&P, and I have new signals, new settings for you if you'd like to watch with me. The ones that I was using worked really well, but Ron opened my eyes to a new setting. If you're a customer at home, use a swing strength of 5 on the daily and set your origination mode to trading days and then 3000. 53000, and this is what I've been getting on the daily chart for the E-mini S&P. And when I do that, the signal for yesterday, March 29th, was a buy signal. That buy signal lasts until April 4th. The prior signal was a sell at February 23rd. The prior signal was a buy at January 27th, a sell on January 17th, a buy on December 23rd, and a sell on December 14th. Here's something funny too about it. We started looking at patterns, and December 1st is a pattern 5. So we were expecting, with these new settings, the sell-off to finish by March 29th, and now I'm expecting it to rise for a little while. Now, Justin, here's another question. How far will it go? How far might it go? Well, here's how my brain works. And I did this with some of the lunar charts. I'll do it with you guys here. I look at how far it went at these signals in the past. So between here and here, it went that high. Between the low of this signal and the next blue signal, it went this high. Between the low of this signal and the next blue signal, it went that high. Over here, between here and here, it went that high. Between the low of this signal and the blue, it went that high. You see what I'm doing? I'm just collecting information. Between the low of this signal and the high of the blue signal, it went that high. And then here's a little baby guy right there. I'm just measuring how high does it usually go at a white signal. Low to high. Now, if you've understood that so far, I'm going to harvest them rather, and then I'll pull these signals and I'm going to stack them on top of each other. And inevitably, every time I do this, there's a cluster where the small signals line up. There's a cluster where the most signals line up. And there's a cluster where the outliers line up, meaning a minimum, a median, and a maximum. I did this on the Facebook page the other day for the down move, and we nailed it. So, Justin, when I do that on this chart, can you see where the triangles are the brightest? There's a cluster of them right here in the middle, right here, right here, right here, right here. Then there's 2 more up here, and then the small ones are right here, where they almost always go. A minimum, a median, and a max. The max is all the way up here. So I'm fairly certain it's going to go to here. Now that says 41.72. Earlier on the Facebook page, without any kind of information but the lunar signals, I did something similar. I looked at what happened the last time we had this sequence. And I said, hey, the last time we had a phase 1 or a first quarter lunar phase back over here, from the low of that candle until the high was here. And if I use that same analysis from the moon, and I took this green triangle and put it over here, I'm supposed to get near 4160. Well, our other analysis just said 4175, basically. So you can use timing signals to predict where prices are likely to go. Everybody with me so far? I kind of have a pretty good feeling where they're going. On or before April 4th to April 6th. If you're an options trader, boy, that starts to open up a lot of possibilities, doesn't it? Any questions about this? Okay, and of course, we can go down to a 15-minute chart and we can try all sorts of things if we want to do that too. When you use the software, the signals are waiting for us on the right-hand side of the chart. They don't change, they don't repaint, they don't disappear and reappear. Right there. So I know coming into tomorrow, 1:30 in the morning, 3:15 in the morning, 7 a.m., 9:15, 12:15. These are still using the 3000 signals, by the way, not the 714. They work just as well. So if you were trading the 15-minute on the ES, long from here to here, puncture trade, long from here to here, close of 9 o'clock until the close of the 1:30 signal, puncture trade, long from 4 a.m. until 8:45, never punctures the blue, it comes down. Enter here, barely misses the stop, finishes a whopping $1.50 up. So John, just a word of caution, when this happens, look at what's going on here. You can see the last thrust up at the time it was supposed to go up. And then John, do you see how this move here was weak? These are the times banks usually buy. They showed up at 4 o'clock. They showed up at 9 o'clock. They showed up at 9:15. You see what happened at 12 o'clock? It kind of went, there's little enthusiasm at that time. So that tells me there's a strong suspicion there may be an intermediate high right here. Next time for me is at 10 o'clock tonight and 1:30 tomorrow morning and 7 a.m. tomorrow morning. Everybody with me so far? I have one last thing to show you, and I bring good tidings. I have been contemplating giving away another indicator with the Warp tool for a long time. And I think it makes sense to give it away with this as a package. It's a tool that not many people are using, and it's cool. I think it's cool. This is called the TachEon Fractals tool. Warp analyzes the historical times that markets are almost always going up or down and projects them into the future. Fractals analyzes prices where pivots have occurred a lot lately and projects those levels into the future. So it kind of makes sense to me, Justin, that these two things should be together in the offering. And I want to show you how they work in the final minutes here of our session, if you'll bear with me. You're getting free stuff today. And if you're a customer already that doesn't have fractals, just email Rachel and she'll send you a copy. If you're a Warp customer and you don't have fractals, email Rachel and she'll give it to you. I'm going to stop offering it as a subscription and just give it to people who have Warp because it makes sense. They fit. So, John, if there's a price in the past that the market keeps bouncing off of like this or like this, Fractals notices that and starts counting how many times those levels get bounced at. So yesterday, for example, these were the levels on the E-mini S&P 3-minute chart. The yellow line is 7:30. I can set the time I want the analysis to start every day. It has to have bounced at that price at least 3 times, and it has to have had at least 20 bars on either side of the pivot. And can you guys see what happened at the lines that it bounced at? The last known place or the last known line is the blue line. That's the high bounce from the previous historical analysis. So here's the question. If it closes above this line, can we use this one as a target potentially? Yeah. If I change the number of bars that I require on either side of the pivot, look, Justin, more and more signals start coming online. Interesting. So if I have large gaps, I decrease my what? I can decrease my standards. Hey, show me where there were smaller pivots that happened a lot. The brighter the color, the more often the market has bounced at that price historically. This indicator on a 3-minute chart is looking at the last 5,000 bars of data, John. I'm telling it to start at 7:30, go back 5,000 bars, find all the prices that have bounced at least 3 times with a pivot that has 11 bars on either side. Everybody with me so far? Knock once if you're still here. As we go back and look at the prior days, you start to get a sense of where your targets can be. So now, if we come here and we add the TimeWarp signal, ready? We can add time and price together. Follow me. 2230. It's below the line, it's below the line, it's below the line. John, it closes above the line. My target is here or out by here. With me? I enter at 112. I'm going to exit by this line or by the time I get to here. For those of you that are pullback traders, Here, I can wait for it to pull back to support and then go long. If I trade a puncture, I can get out at a level that I know a bounce is coming at. I can see where lines are clustered together where the market is likely to ping pong back and forth. And so as I move backwards, I can start to combine time and price. Huh, that's kind of cool. John, if it's 8:33, I'm going to wait for it to pull back to this fat orange line. There is a time that it's supposed to go up, lining up with a price that usually causes a bounce. Up it goes. At 9:30, I would love for it to come up and hit this level. If I do, I can put my stop above this level. Today, the highest level was up here. We didn't get to it. So I had a few opportunities to look for setups that were almost perfect. For those of you that were looking at things like divergence, I would offer this as a suggestion. When I arrive at 218, I wait for the candle to close. I look for a level that the market almost always bounces at a time where it's supposed to go up. I'll put my stop right underneath the level where it almost always bounces. And I will go long and get out at the next signal. Does that make sense? If there are no lines up here, continue to lower the standard, see where more and more pivots might be. And we have a big fat orange line right there. So these levels will appear and tell us what prices the bounces are likely to occur at. If we go back and look at yesterday, you can see the levels where the bounces are likely to occur at. If we want more or less, we can change that number and get bigger moves in between. Is that a useful tool? Is that something you guys think you would want to use, Justin, John? To know the prices where the bounces almost always occur? Okay. It's not something, I used to show it all the time, but it's not something I've ever really talked about in recent days. I think it would work for a lot of you guys. You can almost see, oh, and the risk at those lines is very low. You don't have to use the ATR stops and targets anymore. You can almost use the lines as a guide for when to get in and when to get out. And again, multiple time frames. You can see the levels on here and get a feel for it, and then lower them accordingly and see where the various bounces are. When I have a buy signal at 1 o'clock, I'm going to take that long. My upside target on the 15-minute chart is 40.99. Right, that's always going to be your target now. I'm going to try to get to here before the blue dot. I'm going to try to get to here before the blue dot. I'm going to try to get to here before the blue dot. I'm going to try to get to here before the blue dot. Yep. So it works on large time frames, works on other markets, CL0623. We can apply the same thing. You can lower the significance, and then you would see the times for today and know the places where the bounces were likely to occur. So I don't advocate shorting in an uptrend, but when you see that it's hitting here and bouncing away, take the short it to the next level. When the candle closes at the line here at 8:30, enter at the support level, shoot for this target, goes up $330 per contract. I'm sure you'd have been break even. If it goes down and closes below, try this level. It comes up to the next one, goes up to the next one, and then finishes at the third one by the time we get to the blue dot. Right? Right here at 4 o'clock, it closes above the orange line. It pulls back 5 ticks. Now I'm going to try to go long before 5:45. So we can combine time and price together predictively. So if you're an existing customer with Warp, it's yours. And if you're a new customer coming on board, it's about a $1,500 value for free today. I want to include that. Make sure you get it. I was thinking about that all day, and I think today is a good day to release that. Popular markets like Tesla that everybody's trading. The next buy date on here, according to this, if you're a buy and hold guy, is April 5th. After that, April 26th. Monday, looks like June 5th as well, coming up. Did I get that right? Yep, June 5th. So these are all places you can look for calls if you're an options trader, especially if we're above the moving average. Tesla's priced relatively low in comparison to its new highs right now. We can look at different stocks like Bank of America. The bank stops there. You can see how the short and then the puncture trade are working. Jim, I don't think it's that easy. That's why I said just reach out to her. It'll drive her crazy too, which it'll drive her crazy too, which brings me a small amount of joy. Here's GE on a daily chart. Again, the same kinds of things. We can see the dates out into the future. One thing I like to do is type most liquid stocks by volume. Here we go, Yahoo. We can look and see Tesla. We looked at NIO, Intel. So let's look at NIO. NIO is officially on its way up right here. It was a pattern 4 at this low. In fact, we can turn the advanced patterns on. There's our pattern 4 signal. You'll see that white arrow that drew automatically. So NIO at a pattern 4, you could have bought the low and put your stop right underneath the low. And just like what we talked about earlier with the lunar phases, a 6-year-old pattern that we learned on one of the most active stocks on the market right now, the software called the bottom of it. And we're likely to come up and hit the moving average at $11 right now. Intel is INTC. We can check the same thing. Bump, 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 bump. Here's the interesting thing about Intel. We're coming into a pattern 5 right now. What does pattern 5 usually produce? Pattern 5 almost always produces a drop. So this would be a place if you're an options trader to have a put, very low risk, and see if it doesn't drop right back down. Or you can wait until April 6th and try the short counter trend. The next stock is Oak Street Health, OSH. and that one is working as well. OSH is actually a really good market for this software, looks like. There's what a pattern 5 produces, and we're coming into one right now on OSH. Next stop, Bank of America, and then finally AMD. Load up the data. AMD had a pattern 4 right here with trend on March 13th. You had a buy signal on February 22nd. And the next buy point is April 3rd, as long as it's not a pattern 5. So AMD is a long right now into April 3rd. Alibaba, do they still trade Alibaba? Yep, that's an interesting little chart. Pattern 4 at March 2nd, and the next push up is on April 2nd in Alibaba. So all time frames, all markets, forex, futures, commodities, things like gold. I'm closing up shop, and I just want to, I know today took a long time to get through, but I felt like I had a lot to say today. In conclusion, markets are pretty predictive. There are raw signals we can analyze to build trust and verify that what men like W.D. Gans said 150 years ago is still happening today. We can still verify that things like J.P. Morgan and that quote we saw are still working today. It's interesting to me what people don't talk about. It's interesting to me what techniques aren't mainstream, will never see the light of day on a Mad Money Kramer episode. The people who run the game want you to be off balance. They want you to look at lagging indicators. They want you to follow gurus, and we don't do that here. And so I set out today to prove one thing. I pissed a few people off, but I set out today to prove that, yes, banks, institutional behavior patterns do recur. And if you were offended or confused, it's usually because you've assumed something. You have an assumption about the way markets move. And that's not the case. I've proven here beyond a shadow of a doubt, excuse me, that these patterns do recur. They are happening. They are recurring. Now, I did say there were a couple ways to prove that it was true. We spend about $6,000 a year with Trustpilot, who verifies whether or not a customer is actually a customer when they post a review. We've gotten reviews as low as 1 star, and most of the reviews are 4 and 5 star. So these are actual people who are actual customers that sat in the same webinar you've been. And at the end of it, and having used the software and the products, they came back and wanted you to know what they experienced on the other side of the sale. So $6,000 a year, I basically buy a used car and give it to Trustpilot to make sure that the customers are real. And number 2, I'm not allowed to remove any review. I can't delete any review that's posted. The only thing I'm allowed to do is write a note. The only thing I'm allowed to do is write a note. So that's the second thing. So today, if you would like TachEon Warp and the Fractals tool, programs that have existed from 2009 forward, I'm going to paste a link in the GoToWebinar box. It is the link for the TachEon Warp program. At the bottom of that page is a buy now link. And there's one last thing you need to know. 2 actually. Number 1, we have a trading room where we actually show signals, entries, and exits. That's available to you. It's $149 a month. If you need that, 25% off when you purchase with the software. If you're not a trading room person, you don't need that. Don't add it to your cart. There's a promo code that you can add, WARPOFF. WARPOFF takes $500. WARPOFF. All one word, no spaces, no uppercase. It will take $500 off the price. Plus, I'm going to include the fractals tool, which gives you the predictive price levels. That's an additional $1,500 value. And we're going to bundle that with this program from now on, because it just makes sense to have them together, I think. So if that's something you want, it comes with 2 computer licenses for Ninjatrader. It's a lifetime license, free updates to the Warp software for the duration of your license. Free installation. We make sure it's loaded on your program okay and connects. If you have an Interactive Brokers or a TD Ameritrade account, you can connect your data directly to Ninjatrader charting platform. And our undying Made in America gratitude. We've been here 14 years, over 3,500 customers, an average 4.9 out of 5-star rating with Trustpilot. And all the jokes and out-of-tune songs you can handle during your interactions with me. And that's that. Brian, I think I'm going to cool down with you for a little bit, because you and I have some friction between us, and I'm not quite sure how to resolve it. I don't know how to resolve our friction. My tentative answer is yes, but not right now. In conclusion, you can have this tomorrow. You can own this right now. You can know the times for Friday, Monday, Tuesday, Wednesday, and Thursday right now. It's 6 or 7 times out of 10, the market will get to that time and go in the direction you're expecting it to. Or you can do it the other way. You can use divergence, you can use moving average crossovers, you can watch order flow analysis and volume and all of the things that the kids these days are doing, and struggle month after month, year after year, decade after decade. I met a trader via email. I have the email if you want to see it. I don't think you should. He lost hundreds of thousands of dollars in an options trade with Netflix or Tesla. The email said, I just lost everything. I'm thinking of taking my life. I have a newborn on the way and I have nothing. 3 pieces of information. He's an assistant fire chief. He bought it all on Netflix or Tesla in an options play. He lost between, I think it was $300,000 or $500,000 in a couple days. Wanted to take his own life. Was so distraught with a newborn on the way. That's where you end up. I was almost there. I took apart the washing machine and I know how it works. It makes a lot of people angry. 90% of the people who come through my website, who come through the webinar, leave angry. They don't want to follow the rules. They don't follow a trading plan. They shoot from the hip. They watch for divergence. They look at weird stuff. Doesn't have to be that way. Doesn't have to be that way. All right. I love you all. Thank you for coming. I'm sorry this took so long. I had a lot to say today. I'll promise to keep it tighter and shorter next week. If you have any questions, please don't hesitate to reach out to me, Michael at backtothefuturetrading.com. If you forget, the info's on the website. We'll be here next week, 4 p.m. Eastern, same bat time, same bat channel. May the wind be at your back. May the sun shine upon your gloriously handsome and beautiful faces. May the valleys rise up to meet you. May the mountains of adversity lay low before you as you go. I wish you peace. I wish you health. I wish you joy. I wish you prosperity. I wish you fellowship, all of the things that you want for yourself. I agree with you today here in spirit, and I hope that I can be a part of your journey and adventure as you go forward into trading together. It's a lonely business, and there's a lot of angry, upset, deceitful, fraudulent people out there. I hope today I've given you a little reason to believe me, given you something to think about, and a possible path, a change to help you grow as a trader. All right, everybody, I'll see you next week. Thanks for hanging out with me. Remember, the market you trade is not random, and you can know the times in advance. Have a great evening, everybody. Bye-bye.